Okay, hello. Uh, I want to show you how to place a trade with this. So what you're seeing here is all the currencies that are here for you to trade. They're all paid together. Pairing means the exchange rate just the same way you see in the banks. That's Euro USD, that's Great Britain Pound USD, that's USD Japanese yen. So for now, I want to trade Euro USD. But first, before you make any trade, you have to look at the chart and make what we call a chart analysis to know if this currency would go on inflation or not. So what I do is I'm going to click on the currency. I click on Euro USD. I click here and it's going to bring up this. So you can see trade, you can see charts, you can see details. So I want to see the chart. I click the chart. Now what you're seeing is what we call a candlestick chart. Remember I was talking about geography and I've told you that geography and physics has a part to play here. So whenever the currency exchange goes high, like as high as this, the highest it has gone today is, you click the navigator. This is a navigator. It helps you to analyze heights. So this is the highest the currency have gone today, where you see the highest peak. So it's at 1 point, I think I'm trying to see it clear, 1.13195, where you see that white style. That's the highest it has gone today. Why do you say the highest it has gone today? What you see up there is H1. Where is written H1 means the movement on this chart moves per hour. So what you should be aware that each of these charts is timed in hours, in 4 hours, in 24 hours, in 5 minutes, in 5 seconds. So this is just one time frame. If you want to see other time frames, in my next video I'll show you how to switch screen to see other time frames. So I want to place a trade. Currently you look at the candles. Whenever you see the transparent candles that you're seeing that are looking green, they are going upwards. When you see the white candles that you see on this chart are going downwards. Now the simple logic in the market, not to confuse yourself with what happens in the physical, whenever prices are going up or you see a transparent candle like this one currently here is trying to go up, what you do is you click a buy signal. So what I'm going to do, I'm going to buy this currency to trade now. The current exchange rate of this currency is at 1.1276, where you see that blue tile. So I want to trade. My decision is to buy because I'm operating on the rule of whatever goes up comes down. This currency has come down to the lowest point here and it needs what we call compensation. So what investors will do is they can't keep selling it lower under the 1 hour chart because it's tired. It has tested this lower point and could not go lower, so it's trying to go back up, because whatever comes down in the FX market always goes back up. Whatever goes up like it went high always come back low. So what I'm going to do is I'm going to place a buy on this currency. Why? Because I'm suspecting that it has gotten tired at this low and it has been trying to go back up. Whenever a market goes back up and exchange rate goes back up, it goes back to the previous height. So I'm placing a buy. I click here and it brings out instant execution, meaning that I want to make my trade order now. So I want to make my trade order at 0.11 lot. I can reduce it if I want to reduce it to 0.8. Now for some accounts, this is a $10,000 account, I can use as much as up to 1.0 lot because this capital is big enough. You don't use 1.0 lot in a bigger capital. So I want to use 1.0 lot because my capital is $10,000. So I go to 1.0 lot, which is 1.01, and I'm buying Euro USD. And I've just placed an order. And I want to buy again because I still feel this currency is going to move overnight. I click a buy again. I'm going to leave it open till tomorrow. So I'm done with Euro USD. I want to see this order that I've placed. I come down here to where I see trades. I click trade. Trade brings up all my trade. Currently, I'm losing minus $42, meaning that the trade is floating. This is what it means, trade floating. So my target is, I will know this trade is going to close at a certain time frame. My target is buy. I believe the exchange rate is going to move past 1.12804 zone towards higher prices. My entry value was at 1.12787. So I believe that all these currencies is going to move higher towards 1.128, 1.129 exchange rate zone before morning. That's the trade I've placed. I can also mix another currency if I want to, but I don't want to overload my positions. This is not a risky position. This is a total of 1.010, 1.10. That's total 2.0 cents. That's what you've used to place this order. So I would come back to this trade tomorrow when I profit. But how do you place a trade and go without monitoring? So I want to put stops. So to put stops on this trade, I go back to the chart. Now I look here. to put stop loss means that I don't want to lose beyond a certain value. So I come here and I look at the distance. Remember the rule I say, whenever market comes down to the lowest point, it tries to retrace back. It doesn't break it too low. So this is what happened. This was the lowest point in the market today. This was the lowest point. It's just recovering, trying to go back up. So the likely up in this currency would be towards this level. So this way I'm aiming to take my profit. When the exchange rate moves from 1.1279 to 1.1293, then that's where I want to take my profit. So I will set that automatically. And this is where I think I should put my stop loss. Whatever brings the market to this level, it should not go beyond this. I should close my trades if I'm losing, so that I don't lose more than what I'm supposed to lose. So you see, stop loss is about protecting yourself from losing more than what you're not supposed to. And take profit is like your closest target, obeying the rule of whatever goes up always come down. And you target the nearest high. How am I targeting the nearest high price? This price level here that I'm trying to take my profit is a strong zone, meaning it's a price level that demand was very high. Now currently today is Wednesday. There was a strong demand at this level. I checked back. There was a strong demand at this level as at 3rd July. If you check back, it's 3rd July. So I do what is called a case history. I'm looking back. This price level that my navigator is moving seems to be an activity zone, a high activity zone. So I'm going to put my take profit at this level. So when there's a level with high activity zone, we call that level resistance zone. That's high above. If there's a level of reaction below the current exchange rate, we call that level support zone. So like under this candle, this is the current exchange rate at 1.2 something, this blue tie you're seeing. So under it, these levels have been tested before. The 1.126 zone, 687 zone. If you check back in history, this level have been tested before, as at 2nd July. If you look down, so what you do is you compare with history. What's the lowest the market has gone to and what's the highest it has gone to in 2 or 3, 4 or 5 days. Then you now make your decision. So for me, I bought this currency here at the exchange rate of 1.2 something. I intend to take profit out when it gets to either here or here. So I want to put my take profit at 1.12942. So I go back to my trade. I come here. You can see that my loss is dropping. Once I start profiting, you would see. So I come to take profit. I click on this and hold. It says modify order. So I want to modify my order. Here is take profit. So I want to put my take profit. I put it at 1.129. I edit this score 1.129. So I can put 1.1299 and then I come down. I want to put my stop loss. I want to put my stop loss at 1.12700. Okay, so I've set this trade automatically for future to take profit at 1.129 and I modify it. So once modified, it's already modified. When you click on the currency, you see that there's a stop loss. SL means stop loss, and then TP means take profit, meaning that if the market ever reach my value of take profit, it closes automatically. If it gets to my level that maybe I've controlled my losses, it closes my losses automatically, so I don't lose my whole money. So I've put a limit. How do I see this on the chart? I go back to the chart. I have actually placed this, but you can't really see it yet. So this is how it looks like. Then another thing I want to do, I want to place a trade in a different currency again. I go to quotes. So let's say we want to trade Great Britain Pound USD. So I click on Great Britain Pound USD. I go to chart, because you must always analyze the chart before you trade. Great Britain Pound USD, the candle you're seeing is a transparent candle. It's showing an upward direction, like an ascending direction. Anything that is ascending in direction and is showing this transparent candle, it means a buy signal is in the market. Now you must always consider the time you're trading. This is the time frame of the chart you're trading. This H1 1 hour chart. The current time now is 8:32. It means that in the next 30 minutes or 28 minutes, this candle cycle would finish. A new candle would form, because this is a 1 hour rotation chart. This is a 1 hour rotation chart. So if you want to check other time frame, there are other time frames here. 1 minute chart. So let me show you one. This is a 1 minute chart, how it looks like. It's quite fast. That means every 60 seconds you see this candle that is forming changes. You come to another time frame, 5 minutes. every 5 minutes this cycle of candles changes, and then you come to 15 minutes. Every 15 minutes this rotation changes. So you see how many time frames is used to monitor an exchange rate. You now come to 1 hour. After every 1 hour this candle changes. Now I advise traders to use 1 hour because it's a little slower, and you can observe how changes happen in 1 hour. So you can observe how changes happen in 1 hour. So now I want to buy this currency because I'm observing it's going to move. Your plan is, where is my target take profit? My target take profit is this level. Why do I put that level? Because it's a strong reaction zone. You can see at this level there was a breakdown. At this level too there was a spike up, a very strong reaction. This candle you've seen is called a sell candle, meaning the market fell from higher prices, it depreciated to this level. So whenever you're seeing this kind of white candle, it means depreciation, and depreciation candles are always in the downward direction. You see them, they are white like, while inflation candles are always in the upward direction. So let me use the word deflation. Deflation candles are always in the downward direction, in their white candles like you're seeing me, while inflation candles are these ones you're seeing, the empty candles, not colored. So now I want to place this currency here. My target is, I expect that this currency would move as high as back here in the future, but I want something realistic. Where is the closest high? This is the closest high. This is a close high. So I can decide to put my take profit either here or here instead of aiming too high. So that's what I'm going to do. I'm going to put my take profit here, 1.2598. Where you see that white tile, this is the current exchange rate. Don't forget, it's always on the blue tile. This is the current exchange rate level, this blue tile. So now I go to trade. I have 1.0 lot already set, and I want to buy Great Britain Pound USD. I simply click buy. The order has been placed. I want to place up to 2.0 lot. I go again, I click buy. So it's done. And so this trade, you see it here, you come down to trade. Come down to trade. You see that all my trades are here. Currently I'm floating at negative $80. The rule of patience work in the market. So this is my trade set for like till tomorrow, and I'm expecting to profit. So I will leave this trade till tomorrow, and I will make a live video to see if I profited or not, if my decision was right or not. The idea is always analyze the market highs and low. Let me come back to the chart again. To make it easy for you, you can easily add lines to know the highs and low. So what do? I come to instruments, where you see this logo. I click this instrument. I want to add a horizontal line. I click horizontal line. I want to place it on the highest point. I put it on the highest point. I put it on the highest point. I think it's not showing. I want to add an horizontal line. So I come here. I put it here. I take out the navigator. I think it's not so clear here, but I will do it tomorrow to show you how to line a chart to mark all the highs. Always use this navigator. Navigator shows you highs, mid highs, sub mid highs, till up to where you see the current exchange rate. Anything below the current exchange rate is what we assume that they are called support levels. Anything above the current exchange rate is called resistance level. So this resistance level 1, the closest target and possible outcome of the exchange rate reaching is this. So this is a visible outcome. So I can put my take profit here as a short-term trader who wants to take profit quick. But if I see long-term profits, I can decide to put my take profit here. So that's the concept. So I come back to my trade, and I want to put my take profit at this level. I want to put my take profit as 1.126162. So I simply come to my trade, and I come to adjust it, and I click on it and modify 1.126. 6 9. So I modify. So you can do all this for all the trade by putting stop loss and take profit. So everything is set automatically. So this is about placing of trades. If you have questions about placing of trades, ask me. You always come to your quotes. Whenever you want to do anything, you click on any currency, but you must always analyze the chart. If I want to see a USD, if I want to see a USD JPY chart, I simply click on it and I go to the chart. Click the chart. The chart comes out. That's a 1 hour chart of USD Japanese yen. It's 1 hour. So I can decide to do anything Currently the candle is showing a sell candle. Remember, this is the current exchange rate. This is the current exchange rate on a blue tile, 107. Now I think this currency is going to sell, so what I do is I can sell this currency, but you don't mix currencies too much. You don't decide to mix currencies too much. If you're playing 2 currency pairs or 3 currency pairs, that's okay. So if I'm to sell this currency, I click here, trade, and I sell this currency at 1 point something. Automatically open sell. I click trade again and I sell this currency because I suspect it's going to go down. I go to my trades. You see that all your orders are here. Now I'm taking this because my capital is $10,000. Now when you look at here, your equity is the one dropping, not your capital. Your capital is your balance. Your equity is what shows if you are appreciating or you're making profit or not. Your margin shows 7,000 available for you to make more risk. Your free margin shows how much is available for you to make more stakes in a position. Your margin level percentage is 138%. So if you look at this trade, total lot size I've used, if you count each of the 1.0 lot, that's 1, 2, 3, 4, 5, 6. This is a total of 6.0 lot, meaning I've just used $6 to place this total trade volume. The same way you see me losing negative 186 is the same way that I will profit in the other angle, and the profit is unlimited. The loss too is unlimited if your moves are wrong. That's why you put a stop loss. So in every trade you make, you have a minimum you target to make and a minimum you don't stand to lose. So putting a stop loss will give you a limit. You say, my risk I'm taking, I don't want to lose more than $100 or more than $200. That's what the stop loss helps you to do. Like I did for this trade. I did for this Euro USD trade. I put a stop loss for it at 1.2700. I can do that for all the trades. I can do the same thing. To do it, I simply click here and I hold. I click and hold, modify. I put a stop loss. And I want to put it at 12700 because I've already looked at the charts. The lowest, I think, if the market does not go high, to change to sell so that it doesn't catch me because I'm on the buy direction. Higher prices was my target. Then take profit. I put it at 99 level. I think the exchange rate will catch 99 level, 1.299 by tomorrow, because technically I am correct. So I can do this for all the currencies here, and I leave this trade till tomorrow. That's all about opening trades and setting trades. Tomorrow we're going to talk about how to technically analyze and get the trade right.